Hello everybody, welcome back to Financial Trading Basics Part 42, CNBC's 2022 Stock Draft. As the title indicates, I will be reacting to the stock picks of the CNBC draft for stocks, which I believe was on April 28th, and today is May 5th. So it will be strictly actionable intelligence. Would I buy, hold, or sell the draft picks with quick analysis? We'll be looking at some charts, 52-week highs, overall intuition about the core competencies of the companies, what do they do, and giving you if I would buy, hold, or sell. First, right, we've covered, right, if you, or somebody else said on CNBC that I liked saying, it might have been Stephanie Link, she was in the stock draft. But if you're a holder, you'd be a buyer, just meaning if you're still going to hold something as opposed to selling it, you're still going to expect it to go up, so why would you not buy more? So when do you buy and when do you hold? It's typically just capital restraints, right? You can buy as long as you have money, but even if you think the stock's going to go up, if you have to pay your rent or something or go do this or something, then it's more of the capital requirement restriction as opposed to just thinking the trade's going to go up or down. So it's really just we'll do buy or sell because holding really depends. It really is determined by your capital requirements. So a couple economic thoughts: bulls versus bears versus markets. Right? If I say I'm bullish on something, I think it's going to go up. If I say I'm bearish on something, I think it's going to go down. How about for markets? Right? A bull market or a bear market. I'm sure a lot of you on May 5th or May 11th, 2022 are feeling great about your stock portfolios. Again, I have a little, just small amounts of money out there right now, and mostly cash because I have to buy a house in cash. But I'll close on that probably mid-June, end of June. My lease here is up in end of July. So again, I'm down. Let's see, I'm looking at my terminal right now. I'm clocking in a loss of only, I've depreciated $6,000 on probably 31,000 exposed. So again, I just have a small 10-15,000 position on Norwegian Cruise Line and a small 10-15,000 position on MNMD. And so again, even because the stock draft is for picks for a year, and again, if I'm not momentum day trading, which I would love to do if I had any cash flow, but do I get constitutional rights at any point in time? No. So how do you fit in? How do you make money if you can't fit into the species? I have literally no understanding whatsoever. But so even trade prospectus for a year, that's not how I approach trades. Again, I just look at the market dynamics and say, what trade prospectus is presented, right? Namely, the Bitcoin trade was again, and we'll be reviewing some crypto because there was an Ethereum pick in the market, in the stock draft. But again, we live in a virtual currency environment already. Nothing you have is backed by gold, silver already, the hard asset at all. So you have to have something, whether that's US dollar, like the actual dollars are there, the stable coins, whatever the fuck that is, Bitcoin, Ethereum, any other crypto. We already live in a virtual currency environment, so something has to stabilize that, and it can't come from a nation state, because then you get the supply and demand, you get central banks printing different things, you have different interest in as the sentiment consolidates over the whole species of behavior, right? Our laws are going to conform to our behavior. Our behavior is going to consolidate as people mature. Are people mature? No. So the even outlooks for a year, again, that's still just a very short time in terms of stocks. Meaning, right? If like yesterday, Coinbase took an absolute shit. Again, I saw in Wall Street Bets a chart of like all the major big tech or big growth. I mean, Coinbase right now is at $51.60. After a high of $429, I think at the IPO day. I think I bought 2 shares literally at the very beginning just to fuck around. And I think I sold that at like 2 something. So I lost like $150 on it, but I was just fucking around. But this is at 51.36 at current time. So again, we talked about Teladoc last episode, Netflix, Facebook. They're all just getting absolutely obliterated. Again, the average is down on the Wall Street Bets chart was like 50 to like 95%. Again, I told you my short, when I would have shorted Rivian, Lucid, Tesla, Peloton. Holy fuck, this shit is down to right now $12.79, And that was just a shit business model from the get-go. That one I would have shorted openly. But again, my account size, as I've said several times, I cannot do anything. I just have to sit here and wait while everybody else gets to start family and careers. So that's fun stuff. The CPI, before we get to the stock picks, the CPI for April was 8.3%. Fuck out of here, Rick Santelli. Mike Santolis and Rick Santellis. Jesus, fuck Rick Santelli. Give us some better news. 8.2%. What were we rocking last month? Like 6.8, maybe 6.9. We'll just round up. I don't think it was like maybe 6.2 or 7 point something. So we're definitely going up. That's good. Again, I live at the poverty level. Inflation goes up. My income can't change. Guess who feels nice and financially comfortable? Not me. Again, with over $500,000 of cash, liquid assets, probably over like 600,000 really. Owed $12 million yesterday, and my entire career is completely fucked because I can't pay $1 million to stop getting tortured, like literally, which is fucking awesome, which is just super awesome. So, I'm glad to see that CPI going up. Love that. Peasants buy indices. Again, I still was watching some Josh Brown and Michael Batnick on the compound, and he talks about maybe Josh has stopped averaging what I average. Again, I wouldn't buy indices. Like he's talking about maybe buying the S&P 500 ETF. No, I would not do that. But again, do I think this is the bottom? I don't fucking know. Maybe I'm buying because I bought Norwegian Cruise Line. I'm pretty much priced into MNMD as I want to be till now. Again, until I close on a house, I should still have, for a house I'm looking between $350 and maybe up to like $420. Nice. I'd also have $100,000, $150,000, $160,000 cash left over. Enough for another car. I need a car, so that's another $30,000 to $50,000. And then I furnish the place, so that's another $20,000. So then I have like $25,000, $50,000 left over. Maybe drop down the house price a little bit, just to invest some more, and then maybe buy it then. But I'm not really adding because again, my capital requirements. But I would definitely be a buyer overall if there's something out there you like for sure. Well, I guess I would not buy indices. Peasants buy indices. Josh Brown did talk about something I thought was a correct idea: emotional capitulation. Just not looking at your accounts, talking about I forget, it's just like Robinhood accounts, how many active traders are there, as opposed to, or how many accounts are open versus how many get logged into every day or once a week or on a regular basis. Because certainly in an underdeveloped emotional environment, you're going to have emotional capitulation. People just, whether it's your stock account or your bank account or your checking account, people just who are underdeveloped, oh, just spend, I don't want to look. Very common sentiment. Oh, I just don't want to look at that. Oh, that's going to be too painful to look. Get denial. Literally denial. Speciality. Insecure people don't like to take responsibility for their actions. I'm not even going to look at my spending. So, that's good. But again, like for identifying bear markets and bear market rallies, what exactly establishes a bull market and things are going up, bear market, things are going down? Is there any way to identify reversals? Again, that's when your charts, when you're looking at lower lows for bear markets and higher highs for bull markets, and then technically you'd probably say, lower highs for a reversal of a bull market to a bear market, and higher lows for a bear market to a bull market. Any real fundamental indications that I can think of, or good analysis for that? Again, not really. Again, with the investor maturity, like again, I put a mass subject on people's desks 6 years ago, and the human species still refuses to publish that. So it's like, when there's no consistency, when there's no regularity, you can't predict fucking anything. It's just a bunch of children running around because they don't know how to fucking behave. Those children happen to be 30 to 80. So, predictability, I don't know. People need to grow up. And again, it'll be more predictable once behavior is more consistent. Consistent behavior will increase with maturity. Do stuff, human beings. That's about all I have for what indicates what on bull market, bear markets, and recessions. Talking about recessions again, as a slowdown in GDP, I really don't see that word and that analysis as reflective of the economic health, mainly being quality of life of the individuals. But a recession, if we start losing our GDP growth, again, it just means little nothing to me. So now on to I guess, do I have a Bitcoin thesis with heavy NASDAQ QQQ correlation? And we've pointed that out, and that's definitely basically 1-to-1, but not really. Again, the original thesis for the Bitcoin price action was, again, it was so young in its adoption stage that it would still have the big peaks and retraces. Now that it's extremely correlated and integrated into the market, don't even have a great price prediction, because the price predictions were based on halving cycles and assuming that it was way before it'd be heavily correlated. So again, it's super bull and thing. Like I said, the thesis of currency that I have is really nothing to do with Bitcoin whatsoever. And Bitcoin is the cycle. It's already taken hold in human sentiment. So if you wanted to overtake Bitcoin, you'd have to make Bitcoin again, which it doesn't work. So then the only real counter thesis to, would there not be a good price increase, as we talked about, is if the stabilization of currency can happen without the actual asset doing so, without a big appreciation. And I really don't even see that as possible, dealing with the numbers, talking about, again, $5 trillion exchange in the Forex spot markets every single day, 800 billion in the U.S. equity markets every single day, or I think maybe global equity markets every single day. So, and then pair that with the immature investor sentiment, the bull markets and the bear markets are going to be more aggressive until maturity increases. When will maturity increase? I've watched people stagnate their entire lives and see nothing wrong with it. I go turn on the TV and see entire countries doing that. So not in our lifetimes. So I don't see there's any real way for Bitcoin to stabilize the virtual currency environment, or just the currency environment as it already is, without a big price appreciation from these current levels. All of my things will be from buying or selling today at these levels, just some general analysis. So I know no real price prediction. I definitely think Bitcoin will go up. I think it will go up substantially. Again, the 400,000, which what I initially predicted, I do not see that. I'll still put long-term Bitcoin range in the millions. I don't know, $1 million. No idea why I would not get up to there. Again, just if you have Berkshire Hathaway shares at 400,000 a share, I mean, it's like there's no real. Again, one company versus a currency market is not even close to comparable. And I really don't see. Could be wrong. Maybe 95% confident, maybe 5% chance there's somehow Bitcoin could absolutely stabilize the currency market without having a big price increase from here. So that's my thoughts there. Now on to the picks of the stock market draft. So first up, our participants in the CNBC stock draft. We have Candy Burris. She's a TV personality. We have Terry Lundgren, who was a former Macy's CEO. We have Delano Saporu. I just have analysts, any of these people that are regularly on CNBC, if they have their own high water capital with Stephanie Link, I just have the analysts. No offense, I just people that are regularly on CNBC, I just say analyst. We have St. Peter's, it's a school. We have Kayla Kilbride, she's a TikTok star. We have Stephanie Link from Highwater, she's an analyst. We have Ryan Reynolds, he's an actor. We have Tim Seymour, analyst, from TimSeymourCapital.com and MarketRebellion.com. No, that's John P. DeJarry. The guy MarketRebellions.com. They did not participate in the stock draft. We have David Robinson, NBA player. We have Kevin O'Leary, a criminal. So, Candy Burris in the first round picked Palo Alto Networks, PANW. What do I think here? No idea what they do. PANW is a cybersecurity service provider. Security platform that allows enterprises, service providers, and government entities to secure all users, applications, data, networks, and devices with comprehensive visibility on all locations. So cybersecurity. No real personal insights to that industry. We have a peak at 640 on, so it looks like we're down pretty good since we got drafted, along with everything else. But looking at a 10-year, we'll just do a 3-year week chart. I'll go off that. So trading right at 478, just under 500, off of 600 cybersecurity, the 3-year low of $125. Just no idea. So I would not be a buyer of this. I would not be informed enough to say why would I buy here. In the second round, she picked Zoom. And I just don't know like market share, genuine differentiation in cybersecurity. That's an industry I really don't know anything much about. We have Zoom from the $5.88 down to the $88.55. I would be a seller of Zoom. I do not see why. I don't see anything unique. I think it had a fad appreciation with the COVID lockdown, and I had never even heard of Zoom before the pandemic. So I don't see any real some market share, but no real differentiation to me. So I'd sell Zoom. No opinion on Palo Alto Networks. Palo Alto. Chewy. Food delivery for dogs. We have a high on the 3-year, or just from August of last year at $97. And previous high of $120. And now we're trading at $24. So that looks like a 3-year low. Would I buy or sell Chewy? Dog subscription for food. Do I think it has long-term staying power? Not really. I think people actually like to go shopping more when they have free time. Again, one of my activities, I buy like three days of food at a time, so I have something to do throughout the day. Again, that might not happen for everybody, but I definitely think, this on-demand delivery will go away. Again, if you can cook a couple good meals, then you don't need your food delivered. And food delivery for dogs, you just need to buy a bag at the grocery store. So I would sell Chewy. Yeah, just delivery food for dogs and cats. So next we have Macy's, and these are picks by Terry Lundgren. Then we have Macy's, picked by the Macy's CEO. Consumer retail, shopping. I like to shop. I like to go to stores. Again, another thing just to get out and go do something. Pandemic low of $4.38. We had a recent high in October at $37.95. Going on the three-year daily chart. Yeah, it looks like pretty much company highs. I don't see much growth in consumer retail. So Macy's buy or sell at $20.68 right now. Fuck it, I'd say buy Macy's. Just light. I think consumer retail will go up a little bit because of the pandemic. I don't think it's a growth industry. So light buy on Macy's. Delano Saporu picked Amazon. Tons of market share, obviously. I remember when I worked at the gym I told you I worked at, this dude told me that he was absolutely going to rake shit buying Amazon at $700, and he very well did so. And obviously a mega cap guy, not sure the exact valuation. Again, I'm not looking at the balance sheets, I'm just going off the charts and intuition of the industries. So these are not hard calls in any way, this is just content. And my Bitcoin trade, that was a hard call. The short on Tesla, that was a hard call. The short on Peloton, that was a hard call. But Amazon, this dude literally bought this shit in $700. So yeah, he definitely raked. I don't know. It has too much market share. What's the valuation on it? I'm just gonna get a quick valuation off the analyze tool. I can't get a valuation. So price to earnings, market cap, just right over $1 billion. It's gotta be more than $1 billion fucking dollars. Am I reading this wrong? Is that it's a million, so 100 billion probably? I don't know, I can't do the order of magnitude that fast. But again, the valuation on Amazon doesn't matter that much because they have name brand market share, but e-commerce delivery, they have tremendous market share. So do I think my response would be, do I think people are going to order more online or less online for any consumer electronics? Again, the margin's not really there. I mean, you can buy it's pretty much the same price, so convenience. If people have more time. No real opinion. I would say buy. I think people order stuff online, so buy, but very light buy. DraftKings, DKNG. I'm trading at $10. Another one of these that got absolutely slaughtered. Straight to the graveyard from $74.38. Decent market share. The gambling market is obviously not even close to matured or accessible. It absolutely will be. It absolutely should be. So I'd buy DraftKings. Yeah, here maybe. Yeah, again, a light buy. Again, all of these, again, I don't have it. None of these are hard calls. You're just reacting to other people's picks. But yeah, I'd put a buy on DraftKings. I think the opening of the gambling market and the market share of the company, first mover space, will give this a good room for appreciation. St. Peter's, we have Microsoft. Obviously another big player in the tech space. What do I think about them here? No real opinion. I just bought an Xbox. Don't really know about the profit margin, business growth. Again, valuations, multiples mean nothing to me. Do they have any great novelty to come? I don't think so. Pretty neutral on Microsoft. Yeah, I'll say neutral, not buy or sell. Just meaning I want it shorted or buy it. No opinion. But I'm trying to put myself on the spot. What would I do? Actionable intelligence from the Financial Trading Basics podcast. Apple. Apple and Microsoft for St. Peter's School. Real original, guys. and for what it's worth, they had like a set number of 60 investments to pick, so it's not like the whole market they could have picked. Apple, same analysis as Microsoft. I don't think, if anything, I think Apple has more hype than Microsoft in terms of like fanboy, have to get the next iPhone type of deal. So also neutral on Apple. I don't see either as Microsoft or Apple as having tremendous growth room, as opposed from pure innovation as opposed to just more customers. So because I do think the population is going to go up. Ethereum. The next we have Kayla Kilbride from TikTok, who did not seem to have much research, but again, Kayla, I wouldn't look too hard into it. Look at all these people. Look at all these big investment firms. All of their big researches. Yeah, how's that, guys? How's that going, everybody? Yeah, again, people just buy shit. We're a bunch of monkeys. 70% mature, 7% mature. What do we do? Up, down, left, right, squares. But she picked Ethereum. Again, certainly I'm a bull on Ethereum. I'm a bull on Bitcoin. Certainly a bull on the crypto space. As I've referenced in this video, not exactly sure on price targets anymore. Boeing, airplanes, travel. Do I think people are doing most travel they need from necessity now? I mean, throughout the pandemic. Well, now certainly throughout the pandemic, more so than leisure travel, like ships and cruises. Like we're rocking a 280 high in April last year. 391 high back in October before 2020 hit. So at 131, yeah, I'd put a buy. Any of these, I still see a lot of COVID depreciation that has not rebounded. So I think that would happen, rebound. So I'd put a buy, a light buy on Boeing. Stephanie Link. Oh, I would draft Stephanie Link into my stock draft. Probably, I'd say Liz Young gets the first draft pick from my draft picks. Oops. Oh, Stephanie Link. She'd probably get drafted. Facebook, Meta. Again, huge shit. I could see this coming down more. Just again, I don't see innovation. I see it as just, again, certainly has advertising market share 100%. I don't see it going anywhere. Growth, no. And just the hype of the tech world. It's a website with good advertising revenue. So I can see it low from the pandemic at 137 off the high of 384. So yeah, I would sell Facebook. Facebook. Sorry, Zuck. The reptilians won't accept you either. Sorry. Chevron, CVX. It's energy, I'm assuming. With the war and stuff. What are you doing, Vlad? Stop it. But Chevron, what would I do? I don't really know much about oil prices and like demand, supply, demand, stuff like that. Never really followed the energy markets a lot. Again, with the war going on, I could see it be elevated for a while for sure. But I think once there's resolution, the resolution will come quick with the war, with the pandemic reopening. Again, I don't think reopening has really happened, especially with the China lockdown, stuff like that. So I'd actually be a seller of Chevron because I think the oil prices will come down and it's in a short-term bubble, maybe 3 to 12 months. So maybe this is only for a year, so who knows. I do say that's a volatile one, meaning resolution could bring it down quickly. Failure for resolution of the war could keep driving this up pretty indefinitely and could go substantially higher. Ryan Reynolds now, he's an actor. He picked Netflix. I did like Free Guy, Ryan Reynolds. I liked that movie. That was fun. That was right before I started doing movie reviews, but I could have reviewed that one. Netflix, it's $700 all the way down to $168. More valuation carnage. Yeah, not exactly sure what the valuation is on it, but again, subscription services, like I said, I'm probably going to subscribe to Netflix to watch Ozarks, maybe Squid Game, maybe a couple other shows. There are some shows on there I want to watch, but once I'm done with the show, I cancel the subscription immediately. So, you know what? Peacock was $5 a month. I think I did the premium for $10. Again, $10 a month is no thought at all. $20 a month for Netflix is a thought, but still nothing. So, but again, it's content. $20 for 4 videos of content is extremely worth it for me. But subscription models in general, as an investor, for a trader, I can see this dropping again substantially, and I would have been shorting this type of shit throughout the pandemic for sure. So I can see this coming down more. Light sell. I would sell Netflix. Ford, good old engine maker. $12 down from $25.87. What would I do with Ford? Again, I don't see it as having tremendous growth. It's not going to overtake EVs. It's not going to overtake Tesla. No, it's definitely not going to have the predominant market share in EV. We'll sell some. I don't know. I would say down from 25 at the beginning, at the beginning of 2022. Not really sure what the appreciation was. I'd sell this as well. I would sell Ford. Sorry, Ryan Reynolds, I doubt you're doing too much looking at stocks. Tim Seymour, PayPal. Oh God, PayPal. Financial services. Payment processing. Market share, definitely. I have a PayPal account. Looking at a 3-year daily chart, $87 on the low. Oh, and we're on $75 today. So PayPal, I'm not sure if there's a big multiple on the financial sector right now, but if there is, I'd still be a seller. So I don't see it as 0% growth, 0% innovation, strictly market share. If it's got a big valuation, I would be a seller. DoorDash. Again, before even looking at the chart, I'm going to be a seller. Subscription services for food, I think that's hyped right now, and I think it will depreciate and go down substantially across the industry, across the sector. Yes, $257 in the high of October 2022, or October of 21, excuse me, at $62 now. Yeah, I'm a seller of DoorDash. 4 more. Chipotle, David Robinson, NBA player. Picks Chipotle. Can I remember seeing this shit crash from $700 to $350 on some bad when they had those recalls like years ago, in like 15, 16. Now at $13.02. Again, I don't know. I like Chipotle. I think it's a good value for the dollar. It's a good meal for 10, 12, 15 bucks, whatever you get. So, but it's at $13.02 right now. Now I'm looking at a 10-year. Yeah, off of those 200. with food prices at inflation highs, but I think they pass on the consumer, meaning if inflation goes down, they just charge less. If inflation goes up, they charge more. So it doesn't really I don't think it affects their profit margin much. At these levels, sell. I would say sell. Just looking at the chart and the growth. And the growth really proportional to population. I think they've been around long enough to not have a lot of hype in their name, but just good solid food. And Dave Robinson picks Rivian. I would be a seller of Rivian. A lot of hype to me, a lot of expectation, not much innovation in the electric vehicle space. Some innovation, but not a big change. Obviously less emissions, which is good, but it's still an engine. You still have to build them, still production costs. It's not like a breakthrough business model. We'll have innovation. Well, I don't think we'll have market share. And even it's at $20 right now, off a high of 180. Good fuck, I would have been shorting it way up there. But again, not the top probably, but would have been adding a short position if I can ever participate in the human species. But yeah, I'd be a seller. Maybe not even a seller just because it's so fucking low. But overall fundamentals for Rivian, don't think it has market share. Again, one model of a car is not going to do much for you. Not much innovation, a lot of hype. So I would definitely not be a buyer, light sell. And I would be a heavy seller if it was anywhere higher than like lows. Last one, Kevin O'Leary, Criminal. ARC Innovation. No real comment, don't know what's in the fund. A lot of high cap tech stuff. Again, I still think those could come down more, but I don't think they're going to go away. And with the current investor maturity, I think the valuations will stay pretty high. So no real opinion on ARC, don't know what's in it. Last one, Moderna. mRNA. Off its highs, again, good amount of hype, rightfully so, with the pandemic up to the $497, almost $500. Again, I think mRNA technology will do well for the future, and so any other spikes, I think this will have a good appreciation, so I put a light buy on Moderna. So there you have it. Those are my off-the-cuff buy or sell actionable intelligences on 2022 CNBC stock draft. Closed down with Terminal. A lot of sea of red out there. That was a good day to do some stocks because everyone's just getting slaughtered. I'm probably down again $6,000 on 35,000 invested. I still got. I depreciate. I still have a Bitcoin in like 1.1 Bitcoin, so probably depreciated 12,000 on that. So probably 16 to 20,000 on probably 80,000 exposed. So minus 20%. And again, with money I don't care about. So I'm not feeling too bad. No, I didn't buy no fucking high cap tech. Jesus Christ. So thank you for watching Financial Trading Basics Part 42, CNBC's 2022 Stock Draft.